So let's turn our focus now to another area of the markets, the small cap stocks. Small cap stocks have been on a tear this year, producing large returns, with the Russell 2000 adding to its year-to-date gains and recent record highs. But is the run-up in the small cap stocks coming to an end? Let's ask Kristina Hooper. She is investment strategist at Allianz Global Investors. Kristina, welcome. Nice to have you on Nightly Business Report.
Thanks for having me.
I believe you think the small caps still have a little bit more room to run. Tell me why.
Well, we think over the long term, small caps make a great investment choice for investors, merely because we're in an environment of financial repression. We're going to be there for a long time, and that really necessitates moving out on the risk spectrum, having exposure to a variety of different risk assets, and that includes small caps. Now, over the shorter term, we're excited about small caps. We do think there's some positive aspects of small caps, namely that typically in a rising rate environment, small caps have outperformed. That's typically coupled with an economic recovery. In addition, one thing that I think is being overlooked by a lot of investors today is the fact that companies are sitting on record levels of cash. And typically one of the significant ways they deploy that cash is through purchases, mergers, acquisitions, and that could really benefit small cap stocks.
Quick question, then a quick follow-up, if I might, Kristina. You use the phrase financial repression. What does that mean?
That means an environment where rates are held artificially low. And we are in that environment, and we anticipate we'll continue to be in that environment for years to come. There's a real asphyxiation of yield going on for many traditional sources of income.
You know, in some of the research I was doing this afternoon, I was struck by the fact that there is some sort of nexus, maybe an inverse nexus, between how domestic small cap companies fare and how the emerging market shares fare. Can you probe that a little bit for us, or what the theory is?
Well, it seems that investors who are looking for growth either favor emerging markets or small caps, or at least that's the theory behind it. However, I would argue that there is so much cash sitting on the sidelines, sitting in cash, sitting in core fixed income, that could easily move into both emerging markets and small caps, that it's not an either-or proposition anymore.
There's enough fuel to fuel both, in your view.
Absolutely.
What about the dividend play for small caps?
Well, we think investors need to look for yield in all kinds of places. And if they're moving out on the risk spectrum and they're having exposure to risk assets, including small caps, they should be looking for dividend income even in small cap stocks. So that's why we're excited about dividend paying small caps.
So what percentage of a typical investor's portfolio should be in small companies? And are there certain sectors of that, subsectors of that broad universe that you favor right now?
Well, there's no one percentage because it really depends on an investor's risk profile. But we think there needs to be a diversification of risk assets. There might be some tactical allocation amongst different risk asset classes, but there also needs to be some long-term exposure to areas like small caps. In terms of areas within small caps, cyclicals are showing a lot of attractive values right now. So, for example, industrials, materials, those areas continue to have attractive valuations.
All right, Kristina, we'll leave it there. Thank you very much for joining us. Kristina Hooper, investment strategist at Allianz Global Investors.